Welcome back to Around the Table with Stacy Smith as we take a look at the economy and investing. Now, no one knows how long a correction will last. And indeed, if there's going to be much of one at all, whether we're going to have a recession or not, whether that's on the horizon. So I will ask this question, and I know that you guys are probably not as looking at the bear coming out of the woods as much as I am, but is there a sectors of the stock market that could be considered a safe haven in case you're worried about, a further downturn with the stocks? Anyone?
Well, I would start by saying that technically, yes. Consumer staples, healthcare, utilities. The challenge is that by the time the average investor realizes that they need a safe haven, it's too late. The price of those stocks already have gone up. So this is really where, trying to be a little bit proactive, as I mentioned earlier about the data coming out, as we're interpreting the data and trying to have foresight and be proactive, we might be allocating or rebalancing certain more aggressive sectors into more conservative sectors. But you have to be really careful. These things change on a dime.
Carrie's right there for sure. Historically speaking, I actually have a good chart on this. I looked at the last 10 recessions and corrections, and she hit the three sectors kind of right on the head. Historically speaking, utilities, healthcare, and staples relatively outperformed the S&P 500, while financials, materials, and industrials are the laggards because they're much more cyclical. At this point, given where interest rates have gone up, utilities and staples, we like healthcare as a sector right now. I think it looks pretty attractive from a valuation standpoint. It's got the demographic tailwinds to it with all the boomers, being retired and moving into their formidable years. So I would say those are from a historical standpoint, that's the defensive proxy you'd want to be in should the recession come about.
But just so I understand, that's more of a defensive thing, because if we have a robust market where things are going higher, those are not the sectors that you necessarily want to be in. Am I interpreting that correctly?
Correct. Yep, pretty much 100%. I mean, utilities work when interest rates are low. Interest rates are pretty high right now, so those have not worked because they're thought of as a bond proxy. Kind of the same thing with staples. Staples, that's your Procter & Gamble's, your Kimberly-Clark's, those steady eddies that just hold up well in a recession because people need to eat cereal. People need to brush their teeth. People continue to do those things. So in a recession, their earnings do not get hit as much as an industrials company, as the financial markets when interest rates take a dive and nobody wants to borrow money anymore. So it's all, they operate in terms of where we are in the economic cycle for the most part.
But every one of us advises our clients to not look at the short term. And the fact that the market is off 10%, which is the beginning of a correction, it could be off as much as 20 and still be considered a correction. So there's no way to know if that's going to happen or not. Corporations, as Carrie's concerned about, they're sitting there and they're warning forward. When I look at Standard & Poor's future earnings, they're expecting a 10-12% increase next year, all right, which Mike says they're always high. And I think the corporations are sitting and telling us that they want that number to come down so they can beat it. That's the cynic in me. I've seen this for 50 years. Corporations are very good at spinning their earnings to what they're going to be, and they'll talk the projections down in order to look good when it comes time to report them next September. And all these things are a factor when I look at stuff. I hear that, but I also sit and say, well, why will corporate earnings be down? Unemployment, that's the wild card. Mike said it early in the show. We got to look at the employment numbers. If the unemployment starts to rise, all bets are off. We may go into a bear market. All right. There's no way to know until it happens. I mean, I don't see any layoffs happening. The union strikes are working their way through. So that end of the economy should start happening again. And who knows? Now, will GM make as much money? Probably not, because they're going to pay their employees a lot more.
All right. We have to take a break. In fact, as we have to end the program, as a matter of fact. There is a lot more to discuss on how to manage your portfolios as we try to do that in the upcoming sessions. I want to again thank Frank and Carrie and Michael for joining us. And of course, we hope that Kim will be joining us in for our next session. And I hope you join me again for Around the Table with Stacy Smith. We'll see you then.